Hello, I'm Mark Child, Chairman and Chief Executive of Condor Gold Plc. I prepared this presentation for Minds and Money. This is our statutory disclaimer. A copy of this presentation will be on our website. Condor Gold's strategy is to develop Landia project in Nicaragua into production and to construct a base case 2,800 tonnes a day processing plant producing 100,000 ounces of gold per annum. It's fully permitted, and to continue our successful exploration strategy and expand the gold reserve, doubling it to 5 million ounces of gold. So the investment highlights, we have a PFS level study for 80,000 ounces of gold per annum over 7.5 years out of the single Landia open pit. We can start production in about 24 months. We're permitted to extract 1.12 million ounces of gold. That's from 3 areas: the main pit of Landia of 900,000 ounces of gold at 3 grams, then Mestiza of 120,000 ounces of gold at 8.6 grams, and America of 97,000 ounces at 3.8 grams. So that's the last permits for the feeder pits just came through last month. We've got also the permits to construct and operate, develop, construct and operate the mine for a 10-year period. Our 80,000 ounce production scenario out of the single pit can now be 120,000 ounces per annum, including the 2 feeder pits, and indeed more if we add in the underground. We've got strong economics. We're about $22 an ounce in the ground. We're $700 all in sustaining cash cost and very high IRRs. We're undervalued compared to the peer group on the TSX. We have a price to book value of about 0.27 times. Our market cap's $53 million at today's share price. We have potential for early cash flow, either via toll milling or by putting in a smaller plant, and we're looking at both those scenarios. And the bottom right of the screen gives you the breakdown of indicated and inferred of our 2.4 million ounces of gold. Landia project, it's a former historic mine, mined by Narrandera of Canada, and it closed in 1956. You're looking at less than 5% of the project area here. We have 580 square kilometers. The gold is low sulfidation epithermal vein system. It's spread over 7 areas, 7 little deposits. There's a highway and power running through the project. The focus has been on Landia vein set, which you can see here. There's Landia vein set, so you've got 1.3 million ounces of gold, or $2 billion at today's valuation. As you can see, there's no communities there. We did have, we've done a resettlement. We did have a resettlement challenge a few years ago, but we redesigned the pits to avoid any form of resettlement. That's off to the far left of that picture. Here's some of the drill results. We've got some fantastic drill results. There's 10 meters true width at 34 grams, 6 meters at 32, 25 meters at 7 grams. There's over 80,000 meters of drilling on the project. The production expanding the feeder pits, the permits we got last month after 18 months of work. You can see the detailed here. Now, these are fully diluted mining studies. So this is the actual rock or material delivered, fully diluted to the processing plant, or mill feed as it's called. So the total there adds up to 8.4 million tons at 3.1 grams. Just under 850,000 ounces of gold delivered to the processing plant, fully diluted. And you have 92% metallurgical recovery off that. That will give you about 120,000 ounces of production per annum for 7 years. And we can increase that significantly if we added in the underground ounces. We have 1.2 million there, and the breakdown of that's given to you. Here's the permitted area. These grids are 1 kilometer square. Starting in the south by the main road, we've got the pink area is the outline of the permitted area with the ministry. There's Landia open pit there, that's the 900,000 ounce pit, and you can see that the processing plant is deliberately central to the 3 pits and the tailing storage facility. Powder magazines, all this is fully permitted. One of the studies we've done is to get into cash flow quickly. Can we high grade everything, have a minimum capex, maximum cash flow, pay back quick? And the answer to that's yes, we can. And if we high grade the main pit and add in the feeder pits, which are high grade anyway, we get to 1.6 million tonnes of mill feed at 4.6 grams per tonne open pit material, fully diluted number, containing just under quarter million ounces of gold. Recovered gold's about 225,000 ounces. So that's ample to give us 50,000 ounces of gold, should we wish, for about 5 years. We can also toll mill that. There are nearby mills with spare capacity. One particular, La Libertad mill, has 2,000 tonnes a day spare capacity. So there are two ways to earn cash flow. One is a smaller mill ourselves, and secondly is toll milling, or do both of those. The second part of the strategy is expanding resource. The easy thing for us to do is to drill down the ore shoots along the strike of the existing 3 core areas, and we think we can do that and add another 900,000 ounces of gold. The smaller areas of 4 resources you can see there, Cacao, Central Brecha, San Lucas, Tetiscame, can all be expanded. In particular, Cacao, we think, hosts another 500,000 ounces of gold. This is showing the district scale. We've generally done all this multidisciplined approach of soil geochemistry, airborne geophysics, structural geological model, detailed mapping, trenching. The black areas are 2 major basement feeder zones with a linking structure. This is a very complex structural setting, which is perfect for dilational openings through which the gold-bearing fluids can come through. So what are we up to at the moment? We're getting the project shovel ready to break ground by the end of the year. We have 53 people on the payroll at MENA Land at project level. We're buying all the surface rights. We just bought another 4 hectares last night. We're fully engineering the tailings storage facility, the surface water management system we're ongoing with, finalising engineering studies, and getting everything done and shovel ready for the end of the year. So to summarise, we have a PFS reserve case in the main Landia open pit of 900,000 ounces of gold. We've got 80,000 ounce production coming out of that. If we, on indicated material only, if we add in the inferred and add in the material from the feeder pits, we get to 120,000 ounce production from all those 3 permitted pits. If adding in underground, we can get to 150,000 ounces. If we put out the stocks, probably even 170,000 ounces of gold a year. We've got district scale potential of 5 million ounces of gold. We've got lower quartile globally cash costs of 700 all-in sustaining, undervalued at 1.5% of the gold price in the ground of $27 an ounce in the ground. And we've got a high grade resource reserve, as I say, which pays for a lot. Thanks for your time.